On July 12th, Pump.fun raised $1 billion with its Pump token. It's one of the most ambitious fundraisers of 2025. So, should we pay attention to Pump or stay far away? Here are the facts. Pump.fun is the platform that went viral in early 2024, allowing anyone to create a memcoin in just a few clicks with no technical knowledge required. In just a few months, over 500,000 tokens were created, with some reaching several $1 million in trading volume. Now, Pump.fun wants to take things further. By launching the Pump token at an initial price of 0.05 SRs, the goal is to raise $1 billion with the token launch expected between July 12th and 15th. On paper, Pump.fun is just a launchpad, but why raise such a massive amount for a simple memecoin creation platform? Let's look at the fundamentals, because you'll see Pump.fun isn't just a joke. And if you stick around until the end, you will understand why Pump.fun may have done more good than harm for crypto despite all the criticism. Launched in January 2024, here are a few key numbers. 11 million tokens created in a single year. Over 700 million in cumulative revenue by mid-2025. And a historic peak of $7 million in fees generated in a single day. Now let's look at the token launch conditions. 33% of tokens will be sold during the ICO, no vesting, meaning immediate liquidity, and a target valuation of $4 billion. Pump.fun also comes with controversy. Extreme live streams, a UK ban, and a lawsuit filed in early 2025 in New York, SDNY. In short, it's a highly efficient model, but not necessarily a clean one. Alright, now that we have the numbers, does that really justify a $4 billion valuation? That's what we're about to find out. Let's start with the Pump tokenomics. Apart from the 24% allocated to ecosystem development and the community, there's nothing particularly exciting. It's the kind of tokenomics you might expect from a next-gen Layer 1 project based on some innovative R&D intensive technology. But we're talking about Pump.fun, a team known more for its opportunistic team, which helps explain the token structure. Pump.fun doesn't need money. The model is extremely profitable. They charge a 1% fee on every memecoin launched, which has already earned them nearly $500 million. But raising funds through a token sale gives them a way to lock in an exit valuation based on incredibly high revenue. It also helps create user ownership. In other words, it builds a community, with a token that will end up in the hands of hundreds of thousands of users. They've also reserved a speculative 10% airdrop to build user loyalty. Finally, the token allows for decentralizing protocol governance, a way to counter regulatory pressures. There's also a broader macro dimension that helps explain the valuation, the current state of the market. Despite BTC hitting new all-time highs, the market is actually extremely pessimistic. It no longer values projects based on growth potential, but rather on current value. The market has less faith in the future and has shortened its time horizon. What matters now isn't future potential revenue, but guaranteed current and past revenue. And while BTC's ATH might seem contradictory, it's actually a strong signal of defensive positioning. When gold, or digital gold, rises and tech assets driven by future growth fall, that's simply called a depression. In that kind of context, assets like Hype and Pump become very attractive. They generate immediate cash flow, offering net returns of 5% to 10%. Pump.fun created the memecoin economy in just 18 months. Its token sale could go down in history, or just be another bubble. Let me know in the comments. Are you planning to participate? And what do you think of the project? Now here's my long-standing take on Pump.fun, and why I believe it's been a net positive for the ecosystem despite the criticism. Pump.fun wasn't a fluke or a lucky accident. They leveraged a technological foundation like no other app has before. Pump successfully democratized the combination of two powerful concepts: decentralized finance and permissionless deployment. These concepts aren't new. The real breakthrough was finally making them accessible. They put the technology in users' hands where it had previously been reserved for developers. The result? Incentives changed. For a long time, high token demand and limited supply encouraged projects to neglect users who had no real way to respond. Then Pump.fun came along and its success acted as a wake-up call. The ecosystem is now paying the price for having exploited its privileges for too long, with a revolutionary radicalism that directly mirrored the anti-sovereign violence of previous projects. Alright, I'll say it. The trend of low-float, high FDV tokens and VC-backed chains has done more harm to the crypto ecosystem than almost anything else. But careful, that doesn't mean the Pump token is destined for success. On the contrary, it could turn into a minefield. The Pump.fun tool helps rebalance token distributions by pushing to one extreme, highest float, lowest FDV, as a reaction to the opposite extreme, lowest float, highest FDV. Yet ironically, its own token sits at odds with the very values that made the platform successful, featuring tokenomics that barely consider its users. That said, part of the market has picked up on the signal being sent. Hyperliquid is one clear example. It has benefited massively and reflects the movement much more accurately, both through an exceptional token distribution and by offering an application that empowers users to build for other users. Hyperliquid positions itself from the top down of the pyramid as a sovereign blockchain where developers can build applications and create tokens. Pump, on the other hand, is likely to be outpaced by projects with better token distribution, or at least ones that better serve their applications. Projects like Bonk, with its product Pump.fun, or Radium and Jupiter, have had no trouble expanding their product suites thanks to tokens that are far more aligned with their communities. Censorship resistance and permissionless token and app launches will always remain core properties of blockchains and key advantages for launch platforms. As I mentioned in my previous video on Polaris, launch platforms are set to undergo a radical shift, driven by the next big disruption, AI development, fueled by open source hardware and fully permissionless deployment. Launchers 2.0 won't just make it easier to launch tokens, they'll also enable the permissionless launch of applications. This allows users to move one level up in the pyramid and to bring them even higher. Services that enable the launch of rollups and blockchains like Cosmos Hub's interchain security will play a key role. Its development may have come early, but it will prove to be highly valuable. We're starting to see more interesting initiatives focused on improving how tokens are distributed. Pump.fun was a solid proposal, but more importantly, it was the only one for far too long. Now, Kaito, which leverages AI and a reputation system built around the largest social network, is seeing major success. More recently, Eclipse has gamified its points campaign, adding a layer of storytelling and emotional engagement. It creates a feeling of adventure, amplifying emotions through hope, patience, competition, and finally, the FOMO of chasing a financial goal. It may have been subtle, but it felt amplified because no one saw it coming. A token launch should feel like the ending of a great movie, something everyone's glad they saw, walking out inspired, and with a token in hand. I hope this episode on Pump.fun helps you see the ecosystem more clearly and understand the dynamics that, in the end, no one masters better than the user. Even if Pump.fun might not have been launched with the best intentions, its success has led to genuinely positive outcomes. We'd rather use a mediocre alternative to centralized finance than fuel the financialization of DeFi and its infrastructure. And on that extremely optimistic note, I'll say this: crypto has a long life ahead. In this ecosystem, users must by nature be participants. So never stop being involved. The ones who will benefit the most are not those here for 1 or 2 years, but those still around in 10 or 15. Because one day, without us knowing exactly when or by whom, the application that will onboard billions of real users will emerge. It will have followed the right steps and designed a distribution model that truly engages all its users. Most likely it will combine DeFi and social apps in a unique way. Don't be afraid of missing it. When that app finally arrives, it will feel obvious to everyone who stuck around until then. Some will first feel skeptical, wondering, how can we all agree on sharing a pie that has clear limits? Forgetting that the crypto app we've all been waiting for is precisely the one that will appeal to the entire base of financialized users. Because that app will break through the crypto echo chamber and reach the masses. Precisely because this application will go beyond the usual circle of crypto enthusiasts to reach a much wider audience. It's the same feeling that kept some people from participating in Hyperliquid, the gift of this cycle, except the next time it will be 10x bigger, and probably in another cycle. Don't forget, we're not in a pure PvP game as long as value is still being created. It's possible for everyone to win, at least up to a certain point, the moment mass adoption kicks in with the first real majority of end users. So if we're talking about an app with 1 billion users, don't worry. You still have time to be among the first million if you stay alert. In this cycle, the best we can do is bet on the infrastructure that this future super app will run on, because that is probably already here, and I have my own opinion on that. But that's for another dedicated video, so make sure to subscribe. Let me know in the comments. What infrastructure do you think will support the kind of app that reaches everyone with the unique benefits only blockchains can offer? And if you want more project analysis and deep dives into powerful concepts to help you navigate crypto, feel free to check out one of these videos and don't forget to subscribe. Alright, see you next time, Cosmonauts.